Hey, everybody, welcome back to another episode of FedWatch. My name is Ansel Lindner, and this is the macro show about Bitcoin. Today, we have a banger of an episode lined up with the most requested repeat guest on the show, Tom Luongo. Tom, how are you doing?
I'm good, Ansel. Thank you for the invite, and thanks to all the listeners who wanted to have me back. It's great. It's cool.
Yeah, you are probably one of my favorite writers right now. I just think that you have very entertaining prose, and you have a refreshing narrative, a refreshing view. So we're going to dive all into that today. Sure. But before we get started, let's have a real short obligatory bio. And then can you tell us what's going on with Gold, Goats, and Guns, please?
Sure. So I am Tom Luongo. I'm the proprietor or publisher of Gold, Goats, and Guns, which is both a blog, a podcast, and a monthly newsletter, Patreon service, where I, marry geopolitics and markets and culture war and all the rest of it to try and make sense of what's going on and eventually give people a coherent kind of investment thesis to make sense of all this and try and survive it. So that's what I do.
Awesome. Okay. And I listen to all of your stuff. I listen probably every episode within a day that it's released, and read all of your articles that both are syndicated on Zero Hedge and on your blog there. Can you tell us, are you as bearish as everybody else? I think that right now, everyone seems to be doom and gloom. There's huge recession coming. The Fed is making a mistake. There's war. China's collapsing. Are you as bearish as everyone else, or do you think we might be kind of oversold here, at least for the United States?
This is a really good question. And I was looking at, because you sent me this stuff as the outline beforehand. And I'm like mulling these questions over, and I'm like, these are going to be fun. I'm not as bearish as most, at least on the United States. I think that at the end of the day, I think the Fed is not as serious. And I've been saying this for a while now, that the Fed is serious, that they are staring at an existential threat, just like everybody else is staring at existential threats. Russia's staring at one with NATO and Ukraine. Europe is staring at one with, Hungary saying no to whatever it is they want to go forward with. The neocons in Washington are staring at an existential threat to their Mackinder Heartland theory that they and the Brits have been concocting for 200 years. Like, there's all of this stuff. Everything seems to be coming to a head all at once. It's almost like a boil, right, on your backside. And it's like, it's at maximum, and everybody's got maximum pain right now. And so, and that includes, the what I would call Davos, right, who is also staring at an unprecedented pushback against their policy of their Great Reset and all the rest of it. It's hard to see it all because it's kind of bits and pieces. And well, this one's pushing back a little bit. This group's pushing back a little bit. Bitcoin exists, but it's in a bear market, and blah, 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 blah. So it's hard to wrap your brain around all of it, but let's just make it simple. They're pushing as hard as possible to rob you of your reason, as Murray Rothbard would put it, that there's been nothing but a systemic attack on all safe haven assets in the last 2 months. Are we going to argue with this? Like, Bitcoin got repulsed of breaking out above 46 grand a few weeks ago. I told my patrons, watch that weekly close carefully. It's bad. We're now, down in the 29s. This is where we are. Gold challenged its all-time high. It got quashed. The Fed comes out with the first 50 basis point rate hike in history, in over 20 years. And everybody is finally going, oh my God, maybe they're serious. Because before the Fed has even raised interest rates, everybody's like, well, when are they going to stop raising interest rates? Like, have you ever thought that maybe the Fed's like going to keep raising interest rates, and maybe they have an incentive to do so? So in light of that, I really have to say that I look at the situation in the world today and I go, who's the sick man at the table? Who's the most vulnerable to this conditions that we have today and the things that have been unleashed that no amount of central bank policy can change, which is rising inflation, rising commodity prices, loss of institutional confidence by people, blah, 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 blah. Well, it's Europe. Is Europe has Europe been wiped out of all of its capital? I don't think so. Not when German 10 years are trading at 1%. Right? Not when Italian 10 years are still trading at a premium to American 10 years, like, because the ECB hasn't ended QE yet. Like, no, there's trillions of dollars in capital that are stuffed overseas, either in mattresses in the form of $100 bills or on balance sheets in, on investment portfolios around the world. And at some point, that money is going to flow somewhere. And where's it going to flow? Like, it's got to flow to the US, because as we're setting up for a hot war in Ukraine, a wider hot war in Ukraine, who's in the crosshairs? It certainly isn't New York, but is it Warsaw? I mean, who's more likely to get attacked by the Russians at this point, New York or Warsaw? If I'm capital, and capital doesn't like to deal with uncertainties like this, those are big tail risks. Well, they're only going to fly to the United States. Now, that's to say that the United States markets aren't overvalued. They are. That the property markets here aren't overvalued. They are. All of that stuff. And that the dollar isn't even somewhat overvalued. It is. But that doesn't matter in the short run. What matters in the short run is everybody's going to freak out. And that's why the dollar's rising. It's why the euro is falling, among other reasons. And it's why the yen is getting killed, the pound is getting killed, and everything else is getting killed. So I'd watch very carefully for a technical breakout on the USDX, on the quarterly chart, this quarter above 104. If we close above 104 in the USDX, we're going to 125, 130. When I say this to professional money managers who I've chatted with, they just look at me like I've got four hits. I'm like, well, where else do you think it's going to go? If we're ginning up a war, where else do you think this is going to go? We're going to go to $200 a barrel oil. The Fed can't stop inflation with raising interest rates when the inflation is of the cost push or supply chain broken variety. Keynesians will tell you are only obsessed with the demand side of the curve, not the supply side of the curve. Demand side, yeah, when you've got demand pull, it's easy. You cut back, you raise the cost of money, and you shut people's access to capital off, and you cool the economy off. When the economy's poor and everybody's scrambling around trying to find that next pound of copper, I got news for you: interest rates don't matter. Rising interest rates are then a function of loss of confidence, not of the Fed trying to, cool off an overheating economy. They're following the markets right now. The markets are leading the charge here. So I'm a bear on debt. Eventually, I will be a bull once this initial rush into cash, because everybody's scared, is over, and then I'll be a bull, hyper bull on all things tangible: gold, silver, Bitcoin, real estate to a greater or lesser extent, commodities, blah blah blah.
Yeah, we agree perfectly there, with Europe being the sick old man in the room, and Warsaw or Poland. That's like the fastest growing economy in Europe over the last 10 years. And they're like the most vulnerable. So the growth engine of Europe is the one on the border.
What's interesting, because I just literally read an article, a little short blurb over on RT, right? I know I read Russian propaganda, but the Russian propaganda is telling you that now the recent economic surveys out of Poland, which you'll never hear out of the Financial Times, are that Poles can't make ends meet either. Okay, that inflation is killing the Poles, that they're having trouble. And we haven't even gotten started yet. And now they want to what? They're going to buy U.S. natural gas, the liquefied natural gas, at 3 times the price as Russian pipe gas. Good luck with that. I turn on those coal plants if I were you.
Yeah. So you touched there on the Fed being kind of impotent right now in this situation. And also that you think the Fed is serious, that they're not going to, be the Fed put once again on the market. Mm-hmm. But do you see them going the whole time this year, raising rates? And what would be the reason for that? If we're, the U.S. economy is prints of second quarter GDP that's way negative, and everybody is screaming about recession. Is this going to be kind of a confidence game for the Fed? What's your take on them going forward?
So Keynesians, let's back up for a second. So Keynesians tell you that you have to do, that we have a savings dearth, right? And so they want us to raise rate. They want to do counter-cyclical stuff. You can't raise rates now. You got the Austrians saying that the Fed is trapped, right? Well, at some point, like in the 1970s, Paul Volcker kept raising interest rates after Arthur Burns started the process. Everybody talks about Paul Volcker raised interest rates, but people forget that Arthur Burns raised interest rates to 11% before he left office. And then Volcker took over and raised it to 19 or 20%, right? Everybody forgets this. So Powell's there's been like two phases of Powell. There's been the original push to raise interest rates aggressively, and then the Corona apocalypse, which forced him back to the zero bound. And now we're back to hardcore Powell again, wanting to raise interest rates. Powell understands that the Fed has to not only shrink its balance sheet and provide those treasuries back to the market, because there's a dearth of high quality collateral out there in the repo markets, because no one wants European debt as repo collateral. The only marginal buyer of European sovereign debt is the ECB. So when that stops, everything explodes to the upside. So Lagarde is talking about doing that at the beginning of Q3. Good luck with that, Christine. I hope that goes well for you. I think the Fed is serious. I think they will continue to raise rates. Well, the Eurodollar futures curve is saying they're going to raise rates until June of 2023. I think the Eurodollar futures curve is smoking crack. I think they're going to do it until the end of 2024 or at the end of 2023, and remind everybody who the big dog at the table is. You can taper a Ponzi scheme when you're the biggest Ponzi, and all the other little Ponzi's can get destroyed.
So you think they're going scorched earth?
I think they have to go scorched earth. I think if they want to retain their position as the world's most important central bank, and to bleed off this impetus by a bunch of crazy European technocrats, communists, from destroying central banking and destroying the very important and powerful commercial banking interest in the United States, the single most powerful lobbying group in the United States, then I think you have to destroy Europe. And I think geopolitically, there's support for that. There's support for that on Capitol Hill, because the neocons hate Europe. They want Europe to fight their war for them against Russia. So that tracks. You've got Davos wants to deindustrialize Europe and rebuild it, and actually deindustrialize the world. If they can't win, then they don't want anybody to win, which is really the way they're prosecuting this right now. But at the same time, you have some of their, which is very interesting, that I figured that was the case. And then all of a sudden, in the last couple of weeks, we've seen Italy, Germany, and France all scream for a ceasefire in Ukraine, which is a kind of way of them saying, okay, look, we can't do this. Oh, well, maybe somebody's finally starting to improvise, because they were never able to beat the Fed, and they were never able to really beat the decentralized nature of U.S. federalism to keep the American economy from completely collapsing by centralizing it in Washington. And, governors like DeSantis and Abbott and a few others have been able to break the COVID tyranny, which was important in this process. So now we have the Fed is serious about wanting to raise interest rates, because if you force, European rates back to parity, or where they should be, trading at a deficit they should be trading, at a deficit to U.S. yields. I'm sorry, but I think Italian 10-year should be trading at 8% if U.S. 10-year is trading at 3%. I think that's reasonable. I think anybody who looks at the markets thinks that's reasonable. And yet it's trading at what, 2? It's ridiculous. It's fundamentally ridiculous. But that's what has to happen in order for this to. But at some point, there comes a point where you have to prove that to the ECB that they don't have an unlimited checkbook, and they can go bankrupt. And so the Fed is attacking the gold price at the same time, because that destroys the ECB's balance sheet, because they mark their gold to market. Okay. They're attacking Davos is attacking Bitcoin and stable coins, because they're desperate to try and usher in their central bank digital currencies. Right. You've got Gensler doing his job over at the SEC. You've got everybody, you've got all these flying monkeys running around doing various things. And they're all they're all operating their individual fiefdoms, and the whole thing is a mess. But at the center of it all is Jerome Powell quietly going, dudes, we're raising interest rates. Get over it. And we're going to do that. And we have to liquidate the malinvestment. We have 14 years worth of malinvestment since the end of 2008 to get rid of, thanks to QE and, various forms of QT. We have to get rid of it. And between Zoltan Pozar's notes about how you can't solve the current problems you can't solve this current crisis with interest rates. So the Fed's not solving those problems with interest rates. The Fed's solving a different problem, which is a completely insane political power grab, using what tools it has available to it, and let the chips fall where they may on top, as far as the economy is concerned, because we need a recession in the United States. But at the same time, we also are going to be the recipient of capital flow, which from the rest of the world, which is going to go through a massive inflationary depression. And we should see some of that mitigated. Whether or not the Dow rallies from here or not is irrelevant. I think the US markets are going to outperform, even if it's a general bear market. I don't have a crystal ball on that. I can see the Dow going to 50,000. I can see the Dow going to 25,000, but I can also see the German DAX going to 3,000, or German rates going to 12%. Take your pick. Okay, that's what you could see a 90% washout in European assets and a 40% washout in American assets, and American assets are winning. And right. I could see another 20% drop or 30% drop in Bitcoin, and Bitcoin would still be winning. Or gold could drop another $150 and it would still be winning, because it's only losing 9% from where it's currently trading. Right. So it's all relative. It's about purchasing power. It's about the value of what you can get for the money and the assets that you have relative to the value of other assets, even though we can either hyper deflate or hyperinflate, the two sides of the same coin. Take your pick.
Yeah. One of the things that is just fascinating about your analysis is that you can have rising rates from the Fed, mm-hmm. and that's not necessarily stock market bearish, because of all the capital inflows that will be coming into the United States.
U.S. stock market bearish.
Yeah, U.S. stock markets. Yeah.
Let's be clear about that.
Yeah.
Not to say that I don't think the Chinese markets aren't going to also do well. Okay, because China's already gone through a massive bear market in large caps. Once they open up the economy again, once they stop playing games with mucking with supply chains to create even stronger inflation here in the United States to support Russia's war in Ukraine, once they open the country back up again and they actually start letting goods move, because it's kind of the Chinese version of soft capital controls. It's horrible and it's horrific and it's all those things. And don't get me wrong, I have zero tolerance for it morally, but I'm just putting on my sociopathic political analyst hat here. I'm just analyzing things, dispassionately.
Getting into the heads of a crazy person.
Yeah. Okay. Getting into the heads of psychopaths.
So Wall Street now, I also like how you frame that Wall Street is kind of revolting against the Davos crowd, that would include the ECB. So there is this fraction between central banks, if you will. Sure. Now, do you think that just this news that we got over the last, I think, 48 hours of the EU now, a lot of companies there folding to the rubles for gas stuff. Mm-hmm. Is that also some sort of revolt of their capitalist class against the globalists? Would you see it like that?
It could be. Here's the problem. This now it starts to get really complicated. Now the web gets really complicated, because now you got to factor in geopolitics. Now you got to factor in whether or not they're trying to figure out a way to get what's their priority at this point. They got multiple priorities. They want to consolidate power, in Europe, and then transfer to the WHO, and then from there transfer all the power to the UN. That's their big goal, with the central bank digital currencies and mass surveillance and Orwell on steroids and all the rest of it, right? But here's the problem. Think about the situation. Europe cannot be completely destroyed if they want to do this. Their power center is in Europe. So they want to bring Europe low, and they want to deindustrialize it a bit and, rebuild it in, the hydrogen economy, which is really dumb, or whatever it is that they want to do, whatever fart sniffing idiotic idea they come up with while they're drinking Swiss coffee and eating Swiss chocolates over at Davos. They come up with while the money managers are all in the bar going, what's wrong with these people? Oh, right. Inbreeding. Got it. Okay. Now, So are they breaking with this because they just know that they have to try and salvage something, because they've lost the war, all the battles to destroy the U.S.? Because they've lost all the battles to destroy the U.S. The Democrats are going to get wiped out. The Fed's in control. Wall Street's in control of the Fed. For the most part, they've got spending under control in Congress, right? So, but the only thing they can get through is some spending bills for Ukraine. they can't get Build Back Better, $6.5 trillion. They got $40 billion in weapons from Ukraine, which is mostly a slush fund for the DNC and a cover up, of all their malfeasance, and maybe the last a little bit of money they get out the door before they're all, shown the pasture, which is where they all belong. Somebody please knock Pelosi's teeth out and throw them in the field so she can go wander, going looking for them, so we don't have to listen to her talk in public anymore. That would be fantastic. So my problem with that, I know I'm trying to I am trying to keep this entertaining at the very least, right? Yeah. So I think that the gas for rubles thing is very interesting because it is fueling a weaker euro, right? And a weaker yen and a weaker pound and even a weaker dollar versus the euro ultimately. But again, at the same time, the ruble's not quite a free market yet. They still have to remove capital controls and all the rest of it. But they are doing a bang up job of reminding everybody that we have the Russians, we have a doom loop to destroy the value of the trading value of the euro, the exchange rate of the euro, right? You got to send us, you got to buy rubles from us at whatever price we come up with. And then we don't take we convert them into rubles, send them into the Russian economy, leave the euros on the outside of it, which we then dump. Most likely we'll dump them on Turkey so that Turkey can get out from underneath their net foreign capital a deficit, which is massive. Which is why Erdogan, by the way, is against Finland and Sweden going into the EU, into NATO, because he's got a line with which to launder Russian oil profits. He's got a scheme to launder Russian oil profits to the Turkish economy. It's brilliant. So I don't know. Like Davos is they're starting to improvise, right, on their plan, and they're really bad at it. And so you're getting a lot of really mixed messages here about what's going on. But gas for rubles is absolutely something that could be accelerating the split. Because before this war started, I said, look, what they really want here is they want a European independent foreign policy from the Americans and the Brits. Well, how do you do that? You force into the open that the Brits and the Americans are the ones fomenting the war with Russia. You make the Europeans look like the victims here. And then the Europeans eventually go, look, we just want to walk away, and we'll have, and we'll militarize for ourselves. We'll break NATO, we'll go or separate. We'll create the EU army, and we'll have our own foreign policy, and we'll break with them over Russia. And I always expected that to happen without there being a full-fledged war. And then Putin invaded because Putin obviously got information which said, no, they're actually in cahoots together, and they want to destroy everything and take us over. And that's why he invaded the way he did. I'm not saying it's right or wrong. I'm not saying it. I'm not passing moral judgment on what Putin did here. But that was clearly his strategic move and what he felt was in his strategic best interest. If you watch everything that's been happening since then, it looks like that the people within Davos, that we know to be Davos controlled within the European Union, are trying to resurrect that same end by asking for getting Draghi to go to Biden and ask for a ceasefire, for Scholz to try and talk with Putin. All this, you can see the beginnings of it, while the Brits keep showing up and putting the kibosh on any ceasefire agreements. Europe keeps trying to create a ceasefire environment while the Brits go over and go, no. And Boris Johnson shows up at the last minute and says, no, sorry, Volodymyr, you do that. And we're going to release the pictures of you with the little boys or whatever it is that they've got on them. And I think that's the scenario. And then you have the crazy neocons in Washington who actually think that the Ukrainians can beat the Russians. And that's just, as far as I'm concerned, that's just crazy talk. But, I don't know. There are people who disagree with me on this, but I just think that's crazy talk. I think the Russians have been fighting this war with one hand tied behind their back. And at some point, they're going to take that other hand off, and they're going to turn a lot of Ukraine into a parking lot. And it's going to be ugly. And it's going to be disgusting. And it's yet another way that Putin keeps saying, oh, by the way, I could be doing worse. Hey, why don't we settle? Why don't we do some peace? Hey, why don't we end this? He's been doing this for 8 years with these people, and they don't listen. So he knows where this ends, and I know where this ends. And at some point, I think what he's trying to do is run the clock out and hope that political turmoil in Europe and the United States and Britain overthrows these people.
Mm-hmm.
and that lessens and then you play the war of attrition to hope that you can hope that the political revolution occurs in the West that keeps that from happening, which is why they keep fending off all the false flag things that the Brits keeps trying to set off.
Yeah, I think they're slow rolling it, and they're winning. So why do they need to really get it over quickly if they are just inflicting so much pain on the euro and the pain on the NATO alliance? Because now with Turkey blocking Finland and Sweden, there seems to be some, angst going on from within NATO. So I think that, if he's winning, why get it over quickly? Why not drag it out?
Well, I mean, and this defies military convention, certainly. And I'm not saying that it's the best way to do this. I think there are other ways to have done this. And I think what we could have really hoped for was that they had plan A was really to take Kiev in a show of, shock and awe, and end the concept of the Ukrainian state in 24 hours or 48 or 72 hours. That's what they should have done. And that would put us in a much different place than we're in today. We're in a much more dangerous place today because the Russians didn't do that. And that's fair cop, man. And any pro-Russian commentator that gets angry with me for saying that, sorry, do the math and do the calculus of the responses that you've seen from NATO and the United States since then. Be honest about what their capabilities are and how much money and material and weapons they can bring to bear and what their psychology is. And I got news for you. It's bad because this thing brings us to DEFCON 1.
Yep. Before
it ends. And then it's up to us to stop that from happening.
Yeah. Sorry to interrupt you there.
No worries. I was mostly done. Okay, there you go.
So with this gas for rubles, that's kind of, I think, one of these dominoes. And then the Donbass looks like it could be getting encircled. The northern Donbass area could be getting encircled right now, and that wrapping up in the next week or two. I just kind of feel like if Europe is losing so badly, it might just fall out of the headlines, just like COVID seemed to fall out of the headlines. What would we be looking at next then if these things just kind of get swept under the rug?
Well, the Democrats are staring at a real wipeout, and I mean, complete destruction in November. Every attempt that they have made to create a positive narrative surrounding Joe Biden and surrounding their traditional, issue system has failed. Roe versus Wade has already failed on. I know they're going to try and turn that into a summer of righteous anger by somebody. I'm not sure, but I guess the Elizabeth Warrens in the United States are all going to, I don't know, burn down. I don't know, Levittown or whatever. Maybe I'll just pick a suburb of choice. They're gonna burn down Rochester or pick so that's not going to work. They haven't been able to lever that up. They haven't been able to turn us into rabidly anti-Russians who want to all go sign up for the army and go fight in Ukraine. That has not worked. Everybody's staring at $6 a gallon gasoline and potential food shortages and diesel shortages and this, that, and everything else. And I got news for you. I'm sorry, but politically, no one wants to, after all of this COVID, after all of these lockdowns and all of this disruption to our lives and everything else, all the psychological and physical and emotional damage that's been done by these freaking people, the last thing anybody's going to want to do is going to go through any privation over a bunch of Ukrainian Nazis. Whether you think that that's overblown Russian propaganda or not, it's been effective enough that it's real. And credit the Russians for actually winning that part of the PR war. And they're usually really bad at it, by the way, because they usually tend to deal in facts, and facts are just not usually emotional enough for people. It's just why stop a really good emotional argument with facts? It just doesn't don't cloud the issue with facts, right? So I think the midterms are a lot. I think they're a very important turning point in the story. And you can see how everyone is positioning for it. And the wild card everybody should be looking at with the Fed pulling back on interest rates. So again, I think the Fed's not just trying to destroy Europe, they're just trying to destroy the coup that exists in Washington, D.C. It's Davos that is the problem. Okay? You have to get rid of their political power. And you do that by destroying the groups that they have under their thumb. And you can clearly see Davos trying to shift their support to the Republicans, to the Mitch McConnell wing, or what I like to call the GOP, the GOP establishment. They're trying to shift to those guys, and they're going to let leave the Democrats out to hang, because obviously it's not working. All the money is flowing into the Republicans, onto the GOP side of the ledger. Trump is an important piece of the puzzle, and that he's the one vetting and recruiting the right characters to run for office, for Senate, for the House and whatnot. I know he's probably positioning himself for a 2024 run, but I really wish he wouldn't. I think by 2020, by the time that opens up, I don't think he'll be a factor, but I think that he'll be happy to let the Democrats waste all their money trying to prevent him from becoming, being a candidate on the ballot through all this lawfare about, everybody who was involved in January 6th is an insurrectionist and therefore is invalid under the 14th Amendment, or whatever. Like, that's failed, obviously. So that all those strategies have failed. So they're staring at what they're trying to do now is trying to keep this from being a 100-seat loss in the House, or 75-seat loss in the House. They're trying to keep it to 40 so they can have something to work on. But if they lose 70 and they lose 5 Senate seats, Joe Biden gets impeached, even though the quote unquote majorities aren't there. Because if you don't think that there's another 100 squishy members of Congress and 10 squishy senators in that political environment after that kind of historic wipeout, then you're terminally politically naive. It's not going to be a party line vote, because none of the whips in either of the major parties are going to be able to whip their members in line at that point, because they're all going to be staring at their futures going, my future isn't with Klaus Schwab and George Soros. My future is, unfortunately, with the magatards. I got news for you, Mitch. You're 83 or whatever you are. You're done. Like, you should resign now anyway. Like, that's what should happen. And I think that even if it doesn't go that far after the midterms, what it does do is it sets up post 2024, and for someone to walk in the presidential race in 2024 to end this nonsense and go and run on a ticket of fiscal responsibility, balancing the budget. The Fed's not coming to our rescue. We need to cut spending. We need to cut all of this stuff. We need to reform entitlements. We need to cut $2 trillion out of the budget to pay for the rising interest rates. That's what's going to happen. And it'll all kind of lay itself out for the Fed to then start cutting rates in the middle of 2020, in late 2023, and give that guy the push necessary to get into office.
Yeah. I'd like to steer away so much from politics. I mean, I share a lot of your political views, but let's go into Bitcoin here. So sure. I have been saying recently that, unfortunately, because I come from a ANCAP type background, a gold bug background, I say right now, though, that what's good for the US is actually good for Bitcoin, because most of the Bitcoin, I would say, is held by US citizens or US entities. And there's the biggest share of mining here. Mm-hmm. Venture capital's here. All this stuff is here. And we actually the US has been quite friendly on the grand scheme of things to Bitcoin. Mm-hmm. So what is your take on that statement that what's good for the US right now is good for Bitcoin? And then maybe how would you tease that apart a little bit?
Well, what I would say is I agree. It depends on what you mean by the U.S. Like I think that it just depends on what the implications are. I think you laid it out nicely in your opening there, right? Because those would be the points that I would have made, right? That all the mining is coming in here. All the regulatory situation here isn't the worst we've seen. It's not good, but it's not bad. Gensler's a problem. But at the same time, it's very clear to me that Wall Street, the part of Wall Street that is fighting Davos, likes Bitcoin. Now, do they want to control it? Sure. Do you think Jamie Dimon wants Bitcoin running around to, challenge his dollar? No. But you think the Fed's ever going to put Bitcoin on their balance sheet? Not while I'm, still lucid. But well, okay, maybe before I mean, 65 isn't so ill. So I should still be lucid at 65. I give that about 10 years, by the way, FYI. So I just think that those guys, yeah, I mean, we're starting to see the movement in the regulatory situation. Like the CFTC the other day tried to come out and say, well, yeah, we think Ripple's a currency. Did you see that? Which is setting the stage for the SEC to, do a face-saving thing to allow Ripple out of, because the Ripple lawsuit was a poison pill by Jay Clayton to stop Davos on his way out the door, because Ripple is Davos coin. That's Davos's preferred SWIFT replacement, right? So do the math, and it's pretty clear that you've got forces within the Wall Street that want to create a crypto SWIFT replacement that is under their control, but is absolutely friendly to the proof of work coins and Bitcoin in particular. I think that because they've all got money in this stuff now. They've all got money in mining rigs and all the rest of it. Gensler is actively blocking all the things that would make Bitcoin a real financial asset, i.e., on-chain settled futures or on-chain settled ETFs, as opposed to futures contracts, cash settled ETFs, which only Gensler still has no argument. He just does it. He just says we can't have it. He has no argument for it. So it's clear that, in a post-Gensler, post-Biden dominated environment, a post-Democrat dominated Davos environment here in the US, absolutely. If everything I'm talking about comes to pass, Bitcoin is going to do very well here in the United States. It'll still be under control, though. Okay, don't kid yourself. The Wild West days of Bitcoin not being controlled by Wall Street having some control over the marginal flow through paper futures and paper Bitcoins, dudes, that cat's out of the bag. Unless something radically different changes, in the Bitcoin community to stop that cat's out of the bag. The good news is, well, we have good competitors out there who can take on the mantle that don't have that and can help Bitcoin survive that kind of pressure. I honestly see other proof of work style coins that have now significant histories, that have blockchains are 7, 8, 9 years old, that have the ability now to draw that type of capital in and support Bitcoin in its fight to take out the central banks. I think they're important strategically. That's why I'm not Bitcoin maxi, guys. But you guys have heard that rant before. So I'm literally thinking purely strategically here in so many different ways. Now again, I'm happy to be wrong about being a Bitcoin maxi, all these things, but I think you're right in that the United States, the powers, the money guys in the United States understand that Bitcoin is here to stay, is an opportunity for them to sell products and keep the flow of money to them that they don't currently have under a zero bound interest rate environment with the Fed, and the end, and we're staring at the end of kind of central bank dominated debt-based currency. That's over. Demand side economics is done. Keynesianism is going to be destroyed. Marxism is going to be destroyed. All of this stuff is going to be destroyed over the course of the next 10 to 15 years. Okay. Finally. And we're going to see the emergence of a different type of monetary system, which should be fairer and more inclusive and all the rest of it from our definitions, not theirs. And yeah, so I'm seeing that now. The foundations of that are being laid right now. And so you're hoping that I'm right about all this stuff, because if I'm right, all of this will happen. Then all of this will happen. And if I'm wrong, it's going to be ugly and it's going to be awful. And your children are going to be chattel slavery, and it's going to be just awful. That's serious. I mean, that's I hope I'm right. I really do.
Well, I'm less less bearish on that. My take on how the like big wheel of time turns is that, yeah, you'll have some suffering maybe in the short term, but usually we progress, and usually we are, maybe not every generation is better than the last, but if you go out 4 or 5 generations, it's better than the last. So
of course.
Now I have a question about Europe and the euro in regards to Bitcoin. So in your narrative or your theory of what's going on, would a collapse in the euro, would that stimulate flight into not just US denominated assets, but Bitcoin as well?
Absolutely.
Because we saw when capital flight was big in China 5 years ago, it was real Bitcoin was a big vector for Bitcoin. So do you see
was
the
Europe,
same?
by the way.
Yeah. So
if you remember during 2017, summer 2017, most of the Bitcoin flow, because people were charting. I remember watching the very early apps of charting the Bitcoin flow by IP address, and it was all coming out of Europe. Because the capital controls were going on, because there was a sovereign debt crisis in Greece in 2015, which hung over into 2016, 2017. Like Europe was a mess in 2017. So absolutely. Like I just want you to prep. I have a downside target on the euro of roughly 70 cents. Okay. Now, roughly 70 cents on the euro is World War III, unfortunately. Okay. But that's my rough target. And I think that that's a reasonable one. I hope it only gets to 85. In that scenario, Bitcoin's going to do just fine. Okay. Because the Europeans are going to turn as disgustingly authoritarian as you can possibly imagine. But there are ways around that. Everybody finds ways around it. Black markets are the way of the world. And, it is what it is. And it's good to go through these flushes that we've seen recently. Like, it is good for these things to be, for things like Terra Luna to implode. I wonder about something like Terra in the first place, and wonder if it wasn't a Davos creation in order to, do the Straussian two-step. Stable coins are bad. Oh, look, a stable coin blew up. We need stable coin regulation. Like,
and
what was that, $1 billion? Like, give me a break. I think people print that shit for lunch. Like, I look at this stuff and I'm like, why would anybody think anything other than that? Like, that should be your first base case when you look at something like this. I really, that's why I get asked all the time by patrons and people like, what do you think of this coin? I'm like, I have no idea. I haven't even heard of it. Like, I don't know. I'm not watching the crypto markets from that perspective. I just can't, because most of it, if I were to spend my time dealing with that, I'd be like, oh, there's a vector for me. Maybe I should have seen Luna for what it was immediately. But I just think that things like this are good for the system, because we have to go through stuff like this. It's a young industry. Lots of money, attracts scammers. Scammers are everywhere. Like, it's normal. This is stuff going back, 10 years with Junseth. Right? It's like, it's nothing new, right? The numbers are just bigger today. That's all it is. But people are crying in their beer that Bitcoin's only 30,000. And I remind everybody that I put it in my portfolio for my newsletter in during the depths of the bear market, in like early 2019, 2020 at $8,800 a coin. The breakout was the breakout level of the beginning of the bull market was at 14,000. So even if you bought the quarterly breakout in November of 2020, right, that week when it broke above 14 grand, even if you just bought the breakout, like I told all my patrons to do, you've still doubled your money in a year and a half. Like, and you're crying. You've doubled your money in a year and a half, and you're crying. Like, really, please do cry me a river, because you're supposed to be looking for 8% annually. You just got 65. Please have a little perspective on this. So that's the thing, we have to keep that in mind. Yeah, it was 67 and now it's 30. Shut up, Peter Schiff. A year and a half ago, gold was 2,100, and and now it's 18, and now it's 1820, right? Pete, like, give me a break, dude. Like, just
yeah. Oh yeah. So Davos, they don't obviously hate Bitcoin, but they don't like the stable coins either. They're going more for a CBDC route. So
Yeah.
what do you see is the ECB eventually going to have to try to abandon the euro
Yeah.
and go for a CBDC euro? What do you see going there?
Yeah, no, what I see is very clear. I think it's not hard. I'm not saying anything you haven't heard if you listen to Martin Armstrong or anybody else. I agree with all those people, which is that, look, it's very simple. They've made their plan very obvious. They've told you what it's going to be. They want to. George Soros has made this abundantly clear. They need to crash the European economy to a greater or lesser extent, make everybody desperate, and then say we will alleviate all your debt. We will write it all down. We will issue perpetual debt at, I don't know, 50 basis points or whatever that way, but you're never getting paid back. We'll put you on a, $200 a year drip feed or whatever it is, and 0.5% drip feed. And there you go. And then we're moving you all to the digital euro. And here's your UBI bucks. And, because we all think you're useless eaters and all you do is watch porn and play video games, because that's all you're capable of in this new brave new world that we've built, because we don't need you for anything else. And unfortunately, we have to feed you because we're not allowed to kill you. That's the way they think.
Yeah. Yeah. So speaking of Davos,
I'm not even being, I hate to say when I put it like that bluntly, it sounds horrible. And it sounds like I'm doing stand up, right? But it's not, this is what they say.
Right. Well, these evil guys, they're meeting next week in Davos. Do you expect any big news items out of Davos next week? And also, I would like you to comment here as we are wrapping up, getting close to the end here. What about have you seen the headlines of the 44 central bankers that are meeting in El Salvador and talking to the president of El Salvador about Bitcoin and all this stuff? So can you I think it's interesting, the timing. Davos is next week. This El Salvador thing is this week. Can you maybe connect some dots on that?
Sure. I mean, I saw the thing. I have the best. I say this all the time, and I'm going to shout out now. I have the best patrons in the world. I run a private Slack server community for them, so we chat all day long. And I'm just in constant contact with the flow of information around the world from 40 or 50 of my hardcore patrons who are just in there all day long throwing information up. So I saw the headline that Bukele is convening the Davos of Bitcoin, which I just laughed my ass off at, because I'm like, oh, so nice to see your meme now, like a 44 heads of state using my meme. It just blows my mind, right? And it's so good to see. And I think that guy is absolutely, he's really cool. I think it's great. If you remember, just a note, remember a couple of weeks ago how they were talking about how, El Salvador was in trouble financially because Bitcoin had dropped so far? You don't think that they didn't run an operation on Bitcoin for this purpose of trying to bankrupt the El Salvador because they tried to get off the reservation? Like the Confessions of an Economic Hitman by John Perkins, everybody should read. It's the Bible of the 21st century. Like, if you don't know how this stuff works, like, then you can't properly assess the news. So watching that occur, watching El Salvador stand up, you're seeing the same kind of thing going, well, Michael Saylor over MicroStrategies is going to get a margin call if it drops below 28 grand. No, he's going to have to put some more money in. Like, he can put money, he can go do a cash call to his investors. He's got working capital. He can go down to Bitcoin can go down to $2,800. It's not going to $2,800. Like, there won't be a coin to be had at $2,800. So I'm a buyer at $2,800. I mean, come on, I'm kidding. So I think it's fantastic that they're doing that. And I think that Bukele is like, he's thumbing his nose at Davos by saying, we're going to have the Davos of Bitcoin a week before your big thing where you're all talking about how you're going to have the WHO, take over the world and abrogate all our sovereign governments. But the WHO treaty that's going to get signed next week, this thing is actually the scary one that's on the table, because now the WHO will be able to turn. That's what they want, is to be able to usurp your government's constitutions in order to enact global health policy. And they're going to turn that over to the UN as the enforcement arm. That's the means by which they're going to do this. They're moving forward with their plans. even though their plans are failing, they're going forward with it anyway. This is what I've been warning people about for 2 years. Like, these people are not going to be deterred. They've been building this idea in their head since the Club of Rome first met in 1850, for Christ's sake. They've got a plan. They're going to execute it. And, no pesky Hungarian voters who refuse to get rid of Viktor Orban are going to stop them from doing so, or whatever it is, or American voters voting for Trump, or, people wanting to buy, wanting to heat their homes and being willing to pay for, Russian gas with rubles as opposed to euros. None of these things are going to deter them. They will just improvise as best they can to get everything back on the path. As we stray off the path, they improvise a little bit to push everybody back on the path. I'm not saying that they're going to reach their path, the end of their path, the end of their goal. I don't think they're going to. And I think that that's the most dangerous situation of all, which is that they unleash as much, as much chaos as possible as these two forces, meet and explode. I think that's what the rest of the decade looks like to me. I mean, literally. So I don't have any good news for you other than, that's what it looks like. On the other side of it, it's going to look fine, but it's going to be ugly between now and then. So,
All righty. I wanted to open it up to questions here real quick from the live stream crew. Do you guys have any questions here for Tom?
Yeah, I've got one real quick. So, Tom, this has been, I always love hearing your rant. It's great. So I guess a lot of Bitcoiners and probably your community and a couple other communities, I'd say more niche communities, have been calling out the WEF, the IMF, all these different organizations. I guess, when does the broader, or normies as Bitcoiners refer, when do they wake up? We're obviously seeing record level inflation, gas prices, housing, and all that. When they're saying you need to eat bugs, you need to use less energy, when do the normie people say, screw you guys, up yours? Like,
yeah,
we're not
screw
doing
you guys,
that.
I'm going home, right?
Yeah.
Like the Cartman thing. Screw you guys, I'm going home. I think it's what's that?
I said, I always knew I liked you for some reason, but it was the fact that you can just quote South Park. That was all. Continue, please.
Continue with the rant now.
So rant back on, no problem. I think I think the midterms are going to be your moment, by the way. FYI, Q, for years as my avatar on the internet, before I ever put my face on the internet, if you guys remember back in the early days of the internet, South Park published the Make Your Own South Park character. Well, all of my friends and we all made self-portraits. I won. I got taken out to dinner. I used that for years. And one of these days, ask me, Ansel, I'll send you a copy of it. It's hilarious, by the way. But yeah, it's me with an AK-47 and a shirt that says bastard. It's just the bags under my eyes. It's hilarious.
Oh, maybe we'll put it on the cover image for this standalone video.
Fair enough, dude. Please do. So
I need Ansel, like, if you get that picture, send it, because that is absolutely happening.
All right, no worries. I
want to throw a question at
Sure.
both of you, because Ansel, like, thank you for the treat of Bitcoin and markets. I got to wake up to this morning and read an extra edition of it. But last week you kind of brought up something throughout this conversation, Tom. I kind of feel like you're taking a different stance on this.
Sure.
But I'm curious, just sort of short-term projections based on the way the market is performing today. It looks like we'll get a follow-through day. So we could be out of this bear market in a sense. I'm curious what your short-term horizon looks like. I know you've marked, you marked the midterms as sort of this moment where you could potentially see decoupling, but what does summer 2022 look like?
Okay, this is very simple, guys. Go put up a monthly chart of Bitcoin. I tend to use investing.com's index for all my cryptos because it's the best kind of aggregate you can get of all the, I don't know what their heuristic is or what their algorithm is, but it's going to be reasonably decent. Go look at a monthly chart. Go look at the lows from last summer. If we closed May below the 29,000 area, we're going to 20. That's what I'm telling everybody. No argument. If they can break down on a monthly closing basis, 20,000, 29,000, we're going to go back to 20. And then we'll bounce off at 20, whether or not that becomes like an emotional low or a spike low, or we actually go down there and stay there. We could have a liquidity spasm general market this summer. Okay. The dollar is rising quickly. Okay. Everybody right now, we're in a fear mode. Everybody's selling everything to get the cash. Okay. So everything is trading in a dollar liquidity situation. And the world is still biblically short dollars. It's very important to understand that. There's still $70 trillion worth of dollar denominated debt out there that has to be serviced. Okay. And it's now being serviced at higher rates than it was before. The cost of getting those dollars is higher than it's been in a while. And as that reverses, I'm not saying it's going to happen. I'm saying just watch. It's right. It's good right now, especially the monthly chart right now is really, really telling, because I look at the monthly chart and I'll tell you what I see. I see it high into 68,000 earlier this year, or at the end of last year, and then a 3-bar downtrend, which doesn't throw a technical reversal signal because it doesn't close below that last up bar in, when is that? October, right? We come into January, November, January, we finally get a reversal signal. We get a 2-bar uptrend, which cannot break the January high. And that failure to break the January high in March set up the wipeout that we have now. This is exactly what I said to Ansel earlier in the day. They had a successful defense of 45 grand, which you could see as clear as day on the weekly chart. And had we broken above, and Bitcoin broken above that, shorts would have started to cover. We'd have flipped and gone long. We'd have gone back to 51. And we'd have stabilized between 51 and 39 on the downside. We didn't do that. Now we went down to 33. 33 didn't hold. Now 29's got to hold. If 29 doesn't hold, look at the monthly chart. Like we're looking at a 2-bar reversal of that failed, of that dead cat, what effectively is a dead cat bounce from February and March. So technically I look at the market, it's a brutal downtrend right now, but I got news for you. The Dow doesn't look any better. The euro, have you looked at the monthly chart of the euro?
I was staring at monthly charts.
When
you guys were talking, I was literally just looking at monthly charts. And I was like, there is nothing, absolutely nothing that really looks like you have an opportunity here. And then you zoom into a daily chart, you see some opportunities, and then you have to remind yourself,
no,
always not in the monthly chart.
Always think about things. It's one thing I can teach anybody about investing, because I've done this so wrong. And I'm only speaking from many years of experience of making and doing this the wrong way. You have to match your time frame that you're looking at with the time horizon of your investment. So do not look at daily charts if you are a hodler. You should be looking at monthly, quarterly, and annual charts. Period. Nothing more. Your monthly charts are your momentum charts. They're your day trading charts. Your quarterly charts are the ones you should really be focusing on to see where the thing is going. And then you get confirmatory signals and within the annual chart. Right now, if you want to see the most powerful chart in the world right now, go construct yourself an annual chart, which will be hard to find because most places will give you a monthly breakdown. Go build a 50-year chart, annual chart of the US 10-year bond. And tell me what you say, because I know what I see. Okay. I see something that most people who are alive today have never seen, which is a bear market in US Treasury debt. We have bond traders in this world who are approaching Social Security, who have never traded a bear market in US Treasury securities. Do you think that imprinting is affecting the way they look at the world? I remember hearing that from, I don't know, someone, I can't remember who, maybe it was Harry Dent or something, like 20 years ago, he was talking about this. Like, there's not a bond trader under the age of 50. I've been saying the same thing for this long now. Now I gotta say, there isn't a bond trader under the age of 70 who's ever lived through a bear market in US Treasury debt. And yet, if we break and hold 3% or so, even 2.7%, but let's just call it 3% on the 10-year to end June, the end of the quarter, Katie bar the door, dude, we're going to 7%.
But there's
tomorrow, but we're going there. We're going to see a rise in U.S. interest rates that we haven't seen in since the 1970s, and that's a loss of confidence. And when the loss of confidence happens, that's when safe haven assets shine. But right now, everybody who's in charge, is in power, is trying to tell you, abandon all hope, ye who enter safe havens. So they're beating on Bitcoin, they're beating on gold, they're beating on silver, they're beating on everything. They're beating on all of it. Why? To tell you, don't leave. Don't get out. You don't have anywhere to go. Okay. They're like the robots at the end of THX 1138. Don't leave. You have nowhere else to go. And he climbs up and out and walks out of the cave, right at the end of the movie. That's metaphorically what's going on here. Like this is all big psyop in that respect. And so once you see the way they operate, once you see the way the world operates, you can't unsee it. And it's like you can see it all across all of these charts. But big charts, annual, quarterly, monthly, they aggregate so much human behavior that they give you a really clear picture as to what's going on. Daily charts are noisy. Hourly charts noisy. Even weekly charts are kind of noisy. So, okay. That's hard won knowledge. That's like 25 years of doing this crap. And I finally am getting good at it. And I still make mistakes all the time.
I'm obviously less short-term bearish. I do see probably 95% of the things that you're seeing out there. But I think that all that would be needed for a monster rally from oversold conditions, both in Bitcoin and in stocks and stuff, would be one headline from Powell. Mm-hmm. One dovish, sure. even a 2-week press where they say, "Oh, maybe we've overdone it," and stocks would rally. Bitcoin would rally.
But they can't. But they can't do that at this point, because if they do that, then they torch what's left of their credibility. The Fed's in a credibility game right now, and they know it. When the Fed mentions the fact that they don't think that their credibility has been damaged by all of this, their credibility has been damaged by all of this. Like nothing is real until it's been denied officially. Like, and I don't disagree with you, Mansell. Like, yes, if the Fed were to do that, absolutely, there'd be a big rally. I just don't think that that's what's going to come. If it does come, it's not going to come until after at least one more rate hike. I think what you may see is at the June rate hike, at the June meeting, that as opposed where everybody is now talking about 75 basis points, and the Fed has already ruled out 75 basis points on a meeting to meeting basis, that they go 50 and hold to their guns and say, no, really, we're not interested in doing 75. That may be enough to make everybody, I think, to lessen everybody's anxiety. The real issue here is that we just had, it's like you asked earlier when the normies are going to wake up. Chris asked earlier, when are the normies going to wake up? Well, we got to get the financial normies to wake up. They still think that the Fed is going to raise a couple of times and then stop. And I'm like, no, they're going to go. Okay, but if I'm wrong, I'm wrong. That's fine. If I'm wrong, I'll own it and I'll go, okay, well, then I was wrong. But if I am right, then every time the Fed doesn't come to their rescue, another 10, 15, 20% of the financial normies have to then let go of their old illusions. Think of it this way. The Fed has a credibility problem. The Fed has to now enter a bull market. How do you enter a bull market? Bull markets always rise or climb a wall of worry. I'm not going to speak metaphorically speaking. Why do bull markets climb a wall of worry? Because everybody was bearish. Everybody who's bearish is short, and they don't want to believe that their thesis is wrong. And every time we move through another layer of resistance, we flip yet another small portion of the population from bearish to bullish. And every time you overcome another technical hurdle. That's why breaking highs and breaking lows are so very important, because they represent emotional extremes in the market. The supply of buyers overwhelming the supply of sellers, the supply of sellers overwhelming the supply of buyers. So think of it this way. The Fed now has to climb a wall of worry in everybody's confidence of them. And they're going to continue doing so. And every time they do so, they will flip another portion of the investment community from bearish on bullish on the Fed's accommodative nature to bearish. And that will change their investing habits. That will change the money flow. That will change. I think we're at the beginning of a potential bear market in U.S. Treasury debt. And everybody wants to talk about when the Fed's going to go back to the zero bound. As far as I'm concerned, that's like everybody saying, Bitcoin 225. No, really, it's tomorrow. Same thing.
Yeah.
And no one wants to think of the opposite, which it could go back to 30.
Well, Tom, it's been a wide-ranging show, a very entertaining and fun show. Always great to have you on. Do you have any final words, or do you want to tell the folks where they can get onto your website and follow you on Twitter?
Sure. You can follow me on Twitter at TFL1728, where I am hopefully entertaining, but usually just a jackass. I'm just Mr. Snark. And on the website is tomluongo.me or goldgoatsandguns.com. Either one will get you there. And then from there, you can branch off into, whatever else you want to listen to, watch, support, however you want to do it.
Great. Everybody, I'm Ansel Lindner. You can follow me at Ansel Lindner on Twitter and go to bitcoinandmarkets.com and sign up for my free weekly newsletter. Q, everybody, back to you guys.